Welcome to QAV Australia, 6th of May, 2025, 1:42 in the PM. TK, seeing as we're on limited time today, do you want to jump into your pulled pork?
Yeah, sure. So my pulled pork is on motorcycle holdings. And the reason why I'm doing that, I've avoided doing MTO in the past because it has a small ADT. It's not a big company. But there was an article in the Fin Review on the weekend which piqued my interest about Hamish Douglas, that people will remember from the Magellan Fund, has bought a stake in the company. And I'll just read some extracts from that article. High-profile stock picker Hamish Douglas, who co-founded and ran Magellan Financial until 3 years ago, has taken a substantial stake in the country's largest wholesaler and retailer of motorcycles. Douglas, through his private companies, has bought 10.45% of motorcycle holdings, which carries brands such as Honda, Harley-Davidson, and Ducati. He says, "I bought it when I thought it was fundamentally cheap. They've got a very interesting position as the clear number one player in an industry that's consolidating." The article goes on to quote from a paper produced by IBIS World on Australia's motorcycle sector, and they noted that it was highly fragmented, with many small. The text says small core mum and dad operators. Well, I guess that means small cap mum and dad operators servicing very localized customers. There are estimated to be 700 dealerships in Australia. Motorcycle Holdings has exploited the fragmented nature of the industry, using its scale and scope to entrench competitive advantages against smaller dealers and engage in aggressive acquisition activity. The report said that off-road motorcycles remain the industry's largest selling segment in Australia, with 44% of the market, compared with on-road bikes at 35%. In the 6 months to December 31, Motorcycle Holdings reported a 20% rise in underlying earnings before interest, tax and depreciation of $26.2 million. In that first half, it also reduced its net debt by 1/3 to $24.2 million, while declaring an 8-cent fully franked dividend compared to the 3-cent dividend in the corresponding period. So a lot of good news in that if you're an MTO shareholder. But I decided to do a pulled pork. Oh, good. Well,
QAV Light is, sorry, we bought it back in December, and it's up 29% since then. Bought it at $1.88. Wow. It's now $2.42. It's done very well.
Yeah. And its sentiment, it certainly crossed its sentiment line after its last results. Okay, so it is a small ADT stock, $71,000 traded per day on average. So it's not going to suit everyone listening, but it's still worth talking about given its good performance. They say pretty much the same thing that IBIS said about them. They are a leading motorcycle dealership and accessories group in Australia. They also engage in the sale of new motorcycles and used motorcycles, accessories and parts, finance, insurance, and mechanical protection plans, as well as servicing. Motorcycle Holdings import and distribute a range of motorcycles, off-road vehicles, parts and accessories throughout Australia and their own dealer network. Since 1989, Motorcycle Holdings has grown its dealership network both organically and by acquisitions, and by being granted additional franchises in existing dealerships, and now operates from the largest number of locations in Australia. Their story, founded by David Armet, they have successfully expanded over many years. So David joined Maruka Yamaha in 1988. Have you been past Maruka Yamaha? Can. Probably on
Where's
the
Maruka?
Magic Mile of Motors. Maruka, South Brisbane. The Maruka Magic Mile of Motors used to be TV ads in Brisbane when I was growing up.
I'm not allowed to go south of the river, Tony. They've got my poster up everywhere.
Beat it up might let you.
Yeah. Well, he's next door. No, it's yeah.
The ad used to say Maruka Magic Mile of Motors. Anyway, that's a blast from the past. So he started off in Maruka Yamaha in 1988 and took a part ownership in 1989 with a chap by the name of John Oliver. different John Oliver to the one on TV in the US. Since 1989, we have grown the dealership network both organically by acquisitions and being granted additional franchisees, as I said, and now operate from the largest number of locations in Australia. In 2011, the Archer Growth Fund became Motorcycle Holdings' largest shareholder, following the purchase of the Oliver family shareholding. So John Oliver exits the business in 2011. The company listed on the ASX in 2016. And they toot their own horn there, saying they became one of the most successful IPOs of that year. Since 2016, probably the next biggest milestone was the acquisition of a company called Mojo. The acquisition of the Mojo Group, one of Australia's largest importers and wholesalers of motorcycles, genuine spare parts and accessories, was completed in October 2022. The other thing about Mojo Group is that it also imports and sells scooters and ATVs, electric motorcycles, and the spare parts and accessories that go with that. And they have a 150-strong dealer network. Mojo Group is headquartered in Altona in Melbourne and has a 5,000 square metre distribution centre backed up by a 2,000 square metre facility in Yatala, Queensland. The acquisition provided significant growth by introducing the importation and distribution of those scooters I talked about. So that was MTO. The principals of companies they've acquired over time have often become board members, and I'll talk about that in a minute. Well, I can talk about it now. So David, this company has an owner-founder, David Armet. Since 2011, he's been on the board, which is kind of strange. Stock Doctor says since 2011, but he's the founder and goes way back to the start of the company. So I think he's probably been on the board for longer. Anyway, he owns 15.4% of the company. Robert Casson, who has 35 years of experience in the motorcycle and bicycle industry, joined in 2017 as part of the acquisition of Casson's Group, a motorcycle and bicycle clothing and accessory distribution business. He owns 4.55%. And lastly, Michael Poynton joined in 2022. He was the former CEO of Mojo Motorcycles I spoke about before. So overall, the directors own 29% of the company, including the founder. To go through the QAV numbers, I'm using a stock price of $2.40, which is above the byline. It's less than consensus target. It is greater than IV1 of $1.12, less than IV2 of $2.50. Yield is 6.25%, based on that extra dividend I spoke about before. So it just squeaks in above being the average mortgage rate in Australia. So I give it a score. Stock Doctor financial health and trend is strong and steady. Stockopedia ranked the quality as 89 out of 100. Value as being 96 out of 100 and overall being 99 out of 100. So Stockopedia ranked this company highly. The F score in Stockopedia is 7 out of 9. So that's the ranking of the quality metrics of the company. PE is 11 times, which is high. But as of the last results, it was 9.16, which is not quite the highest over the last 3 years. So it scores a 0 for us. Prop cap is 3.99 times, which is low. So we can buy this on just under 4 times operating cash flow, which is quite good. Net equity per share or book value is $2.78. So we can buy it for less than book and book plus 30. But I do highlight that NTA, net tangible assets for this company, are only 84 cents. And we've seen this before in dealership roll-ups. Last time we saw it was in the pulled pork on ASG, Auto Sports Group, where the roll-ups in the sector means paying goodwill to buy out other franchisors, and that goodwill goes on the balance sheet, which gives it a disparity between net equity and net tangible assets. I don't mind that in these cases because, again, as long as they paid a reasonable price for those dealerships, oftentimes the dealership trades above what its asset backing is, the inventory of stock, whatever if there's any sort of calculation as to the franchise value, oftentimes someone won't sell until they get a bit above that. So as long as the franchisors they purchase remain relevant and trade well, then I think that it's fine to go on book value. What else can I say? I did want to talk about CEO succession, which has just happened, but I'll just sum up the scores first of all. So currently, MTO scores an impressive 16 out of 17 for quality and 94%, which is 94%. And the low prop CAF multiple means a QAV score of 0.24, which is pretty good. Risks, it's a retail business, so they may suffer in an economic downturn, which may be coming. Who knows? Certainly an uncertain future. They are diversifying more towards electric bikes and scooters, which are helping their ESG credentials. Motorcycles overall do use less fuel than cars and trucks, so that also helps their ESG credentials if they can convert car drivers to motorcycles. But I highlight it because people with an ESG screen will need to look closely at the business and make their mind up on whether it's a positive or a negative in terms of that. We remain neutral on those kinds of things and let our listeners decide for themselves. But I did find the last thing to talk about in terms of risk, I did find a notice dated 27th of September 2024, which reads, Motorcycle Holdings announces the retirement of Mr. Dave Ammett as Chief Executive and Managing Director, and the appointment of Mr. Matthew Wisner as Chief Executive of the company commencing in December 2024. Matthew brings over 20 years of senior leadership experience in both wholesale and retail automotive industries, and et cetera, and he's been managing director of various retail and wholesale operations and publicly listed companies, and has experience in the business sector. So looks quite reasonable. What piqued my interest was further on down the announcement. After 13 years as CEO and Managing Director, Mr. Dave Ammett will transition from his executive role to a non-executive director from December 2024. Mr. Ammett will continue to be actively involved in shaping the strategic direction of the company and provide counsel to Matthew, ensuring a smooth handover while retaining a large shareholding. Mr. Ammett said, whilst retiring from the CEO role, I intend to remain involved in the strategic direction of the company and assist Matthew in any capacity I can. However, I do need to focus on my health following a recent accident. So the time is right for me to step aside and pass the baton on to Matthew. I'm sure Motorcycle Holdings will benefit from Matthew's track record of driving business growth and focus on results. I will stay closely involved in the business to ensure smooth transition and intend to remain a significant shareholder going forward. Didn't say what the accident was. I'm wondering whether being involved in the motorcycle industry the way he is, whether he's had a motorcycle accident, which I guess is one of the dangers of riding motorcycles. So I added that to the risk involved in this company. They're all riding motorbikes, and that may be a risk. As one of my colleagues said many years ago, what do you call a cyclist? A temporary Australian. And that might be a risk for the company.
Wow. Did you get any assessment about their position on electric motorcycles?
I didn't, only that they were trying to diversify towards that sector of the business.
I just asked ChatGPT how big that niche is. It says in 2024, only 429 new electric two-wheelers were sold in Australia, in stark contrast to the 94,224 new motorcycles sold overall.
Yeah, I think they must have all been sold in King's Cross, judging by all the electric bikes that the Deliveroo riders were, and scooters the Deliveroo riders were using.
Right. Yeah, maybe that is the market for them too. Yeah, I wonder why. They're not, it's not a bigger, I don't know what percentage of cars are electric these days, but it's probably a bigger percentage than that, I would imagine. I saw a thing in the Financial Review today. You know, BYD is selling 6 times the amount of vehicles as Tesla in Australia.
Yes, I did see that article. Interesting, isn't it? And who was a big investor in BYD?
Charlie loved BYD.
Yes, correct.
All right. Thank you, TK. Thank you, everybody. Have a good week.
Yes, happy ASX.